So we are talking about how to make 2020 your best accounting year yet. And this is for small business and entrepreneurs, but there's probably other stuff that, could correlate to people that have a job. I don't even know. But the whole point is helping people understand the taxes of their small business. Now, while we're in the tax season now, because it's January at the time of the recording, we're not talking about doing your 2019 taxes. We're actually talking about what you need to do and the steps you need to take this year so that come next year, you're so prepared, you know what you can and cannot do, and you've saved enough money to hire the right accountant and to pay your taxes. Woohoo! So I'm Renee, and I'm the founder of a company called We Wild Women, and I help first-time female entrepreneurs start their dream business the right way. And I have with me Chris, so why don't you introduce yourself?
Yeah, so my name's Chris, from the Moncton area. I am a CPA. If anyone knows what a CPA is, I'm from a CMA legacy, so I'm not one of those CAs. Maybe you have some friends, but I always like to make that distinction. So
is a CPA better than a CAA?
They combined the two and made CPA.
Okay.
Yeah. So it's just I have to use CPA because they require.
So that's certified professional accountant, right?
Yeah.
You're a pro. And not only that, you are a coach at the CrossFit.
My goal is to.
Hello? You there?
We good?
Yeah.
Okay.
Okay. So not only you're an accountant, but you're also a CrossFit coach.
Yeah. So I do that part-time on top of helping my clients.
Which is funny because if anyone here does CrossFit, they're depending on the workout, which is like 90% of the time, there's a lot of math involved. Yeah, and whenever Chris is coaching a class and we have to like add up all our reps and whatnot, we're like, Chris, what is that up to? Like, ask the numbers guy.
Yeah.
Even you are confused sometimes.
I shouldn't really say this, but sometimes I think my wife will tell you that I'm not really a great counter, but that's usually in a workout when I'm dying. So.
Well, it's okay. That's what calculators are for. So when you're starting your business, the best advice I ever give anybody in starting a business is there's two, first of all, it's only get the business advice from somebody who's successfully done it before you, or who's a professional. So in this manner, it's you, an accountant. But the two things you need to outsource from day one is legal and accounting, because yes, you could do this stuff ad hoc by yourself, but the reality is long-term, you can make some pretty big, very, very expensive mistakes. And that's one thing you want to avoid. And I know there's a lot of ambiguity and like people think they know accounting. And then I honestly thought I knew accounting. And then you and I chatted yesterday and I was like, wow, I didn't know this. So it's really interesting. I would say, like, with all due respect to accountants, next to legal, it's probably the most boring thing to talk about. But if you do it wrong, it could cost you so much money. And so it's important to do this right. And that's why we are doing this call today. Okay, so we have a few questions. Originally, it was supposed to be 20 questions, but I knew that would probably take us 2 hours at least to go through. So let's start with the most common questions small business owners have when it comes to accounting. I would say, for me anyway, because I know like in the console of my car, I have gas receipts and receipts for all the things, thinking one day I'll get to those because maybe they can be expensed. So tell me, when it comes to receipts for small business owners, let's just talk about that.
Okay. Well, when it comes to receipts, it's basically a backup, right? It's proof that you bought something. I think one of the most important things to keep in mind is that you need to keep your receipts, and you need to keep them for as long as 7 years in the past, because the government can actually legally go back as far as 7 years to look at your books. So if they audit you, then they can decide, well, we want to see something from 2014. And if you don't have it, well, they might throw some penalties at you.
Fine
So.
you? Really? Wow. Okay.
Yeah, or maybe request back taxes saying that, well, you didn't claim that, so now you owe taxes on.
Okay. So if you don't actually have proof of the purchase, they might force you to pay taxes on something.
Yeah.
Okay.
So it's just better. I mean, the chances of you getting audited are pretty slim, but it's better to be prepared.
But it could happen, right? And if you happen to be the one person who's not prepared, then you could be screwed.
Exactly. Yeah. I would say the other thing is today there's a lot of moving from the old school way of tracking and organizing receipts, which is physical copies, filing in accordion folders. So one thing that some people may not know is that a picture is actually pretty good. As long as it can be read, it counts as a backup, as long as it ties into your bank account, right? And there's a lot of great tools out there now that can actually do this for you. So instead of meeting with your accountant physically to drop off receipts, you can on a daily basis take a picture and they get it instantly, and you can rip up your receipt and throw it away like immediately. And
do accountants prefer that method?
It all depends who you're. For me, I make it mandatory if you come on as a client. This is the way we're going to do it. If you're not up for it, well, it's too bad. There's some accountants that are set in their ways, and they prefer to sit there and take a receipt, a paper receipt, and enter the information. So
the old school people.
The dinosaur.
Okay,
dinosaur
so tell me,
we're going to call them dinosaurs.
The dinosaurs, right? The dinosaurs. With all due respect, but times have changed.
Yeah.
Okay, so what are some of these technologies that people can use, and what are the costs behind using them?
So there's some really great ones out there. I mean, you could keep it as simple as Google Drive, having a shared folder, Google Drive, Dropbox, something that your accountant can have access to. Organize it in there. Still a little bit of work, but there's really great apps. And the two that I've used, and one of them I actually currently use, is Receipt Bank and HubDoc. Super powerful apps, and they're not free, but obviously you get all that crazy time saving with using these apps. If you do come on with me, there is a little bit of a discount, right?
So if people work with you, then you offer a discount and that stuff. So even if I didn't work with you, what does something like that cost?
It would cost anywhere in the range of $20 to $25 a month.
A month, okay.
Yeah,
and so if you have a lot of receipts, so at the end of the day, this makes a lot of sense to use. And so how does it work? Do you take the picture? And I've used a thing a long time ago that allowed you to take pictures of business cards, and it was called Card Munch. And essentially it would take all the information from the business card and put it into a spreadsheet. So how does it work? Is it exactly like that, or is it a little bit more complex, or?
Yeah. So, I mean, there's obviously a bunch of stuff going on in the background, a bunch of algorithms and things like that. But essentially, they created these two apps, and they had the ability where it takes the picture, it scans the information, and there's usually 3 pieces of information that the program needs, and it's the name of the supplier or vendor, the date, and the amount. And it'll pick up everything. It'll even pick up if there's tax in there. It's super intuitive. The great thing too about these apps is that you can even create rules within it after. So if you have a supplier you buy from regularly, you can tell Receipt Bank that if I get something from this supplier, it always goes to meals and entertainment. So I want you to always record it at this tax rate to that category. And you can actually select it and have it auto add into your accounting system.
That's so brilliant. Okay. Yeah. So huge. That is awesome. And so there's probably a bunch of stuff. If you go on the App Store, you could probably find things, but you're suggesting these two.
Yes.
And then obviously if people work with you, then if they're using that technology, it's a lot easier for you to understand. So it expedites the process too of like the expenses. Okay. Is there anything else with regards to receipts that we should be talking about?
Only when it comes to certain types of purchases. So for example, if you buy equipment, it's just important that if it's not clear that that's a piece of equipment that you bought, you need to at least notify your accountant that it was equipment, because the accounting reporting standards for accounting for equipment purchases is different than just recording a regular purchase of supply.
And how is that? Why is it different? Because of like amortization?
Yeah, so it's just, if you bought something that's $10,000, yes, it's a lot of cash out, but from an accounting perspective, you're allowed to amortize it over, say, 10 years. So it's $1,000 every year expense, not 10,000.
Right.
So it just shows, it's just a way to smooth out the cost because you're using it for a long time and it's earning income for you too. So.
Okay, cool.
Yeah.
Anything else with the receipts, or are we moving on to the next thing?
We can move on, yeah.
Okay. So to do that, business, right. So, when it comes to physical receipts, so we are not moving on from receipts, actually.
Okay. Okay.
And this is like the dinosaur advice that I've received is like, if you don't use the technology, or maybe you're a little bit of both, right? You use like an app and then you keep your receipts. Is it common practice to write on the back of your receipts, so like who you were, like say you go out for dinner, you bring a client out for dinner, are you supposed to write who you met and the details of it? Like, how does that work?
So it's a good practice, but I don't really see it a whole lot. Sometimes I'll see with some of my clients, they'll indicate what this expense was. Usually in the cases where there's not a lot of detail on the receipt or the document. But it's always a good idea to indicate if it's something special or there's a certain, like a special situation related to that purchase, and you should probably, like it's taking a client out, a prospective client out for dinner, you might want to indicate that because there could be some rules against claiming that. So.
Right. Okay, cool. So what about restaurants, now that we're kind of on this? What about expensing alcohol and tips? Is that a no-no? How does that work?
So tips can be expensed. It's added to the total of your expense. However, they're not taxable. So it's always good to make sure that you provide a detailed receipt that shows how much the tip was, and not just the debit receipt. So from the debit machine, right? Alcohol is a no-no. So I've seen it before where a lot of restaurants now will actually print you out an actual business receipt. So if it is for business travel or anything, they can print it out and say, this was the total cost of your food. This was the total cost of your alcohol. And at least that way there, when it goes to get processed, it's an easier way to, the accountant doesn't have to calculate. It's right there how much the meal was. And then the alcohol is excluded automatically. So.
Wow, that's awesome. Okay.
Yeah.
All right. So enough about receipts. So what can a small business owner expense anyway?
A small business owner can expense anything that's been bought to earn income. So anything related to earning your income. And it can be anywhere from pens and pencils, right, to make notes while doing business, to anywhere as far as like I said before, big equipment purchases or things like that. There are some special situations with regard to, say, vehicle expenses, and some other special cases where there's some rules that need to be applied.
Okay. So what about clothes?
Clothes, no. Well, it depends. If it's a uniform and you're required to wear it, then yes. One example I like to use is someone tried to claim the purchase of a suit where it's not required to do your job. It's just it's an accepted best practice that you need to look professional. So you have to make that distinction. But let's say if you own a contracting business, well, you could expense your work boots because you need that because it's safety and you wouldn't be allowed on the job site if you didn't have it, right? So it has to be very specific to doing your job.
Okay, so what about somebody who is paid to be on stage?
Someone who is paid to be on stage. It all depends on who is. Are you referring to like a singer?
No, like people
Or
that
just,
are professional speakers, or even people that have YouTube channels. So their income is because they have to look professional on stage. They could be professional public speakers that get paid thousands of dollars to do that work, or they make money off like a YouTube channel.
I would still say no because again, it's I've never seen it, but you could have a complete slob who's a successful YouTuber, right? Who chooses to wear that T-shirt with a bunch of holes. But I would still say no, just because it's more around the lines of it's kind of expected or like accepted that you're trying to look professional. It's not necessarily required. Yeah.
Okay.
You could get away maybe with some things, but I feel like
there's probably like a certain percentage of it that you could write off, but yeah.
Probably, as long as it's reasonable, yeah.
Yeah. Okay, so what about vehicle expenses? So perfect example is I work from home, so this is my home office, and we'll get to the square footage thing. But, what happens if I have to drive a couple hundred kilometers to go visit a client? How does mileage work for my vehicle?
So mileage you can claim, and if you it's important to track. So if you don't have a logbook, then be careful with that and saying that you cleaned as much mileage. So either have a physical logbook, or again, going back to technology, there's some really great apps out there that will actually run in the background on your phone, and it'll actually record when you start moving from a certain spot to another, and then it'll automatically record it as either a personal drive or a business drive. So it's very learned. You can teach it too, so it knows this drive is for that, this drive is for this.
So what app is that? Do you know?
There's one called Mile IQ.
Yep.
Really good. There is a free version, but there's only so many drives. So if you drive a lot, it's like $8 a month, I think. So like totally worth it if you're claiming mileage, because the amount you're going to save on mileage and taxes is going to pay for that, right?
That's awesome.
I think QuickBooks Online has a mileage app too. So if you use QuickBooks Online, it'll feed right into that.
So we're talking about vehicles now and mileage. What about just general vehicle expenses?
So vehicle expenses, there's a couple of different things. If you're self-employed and you use your vehicle for personal and business use, then you can claim expenses such as like gas, insurance, repairs and maintenance, but it's based on the amount of miles for business use out of total miles. So if you drove 10,000 kilometers for business use and you had a total of 20,000 that year, you could claim 50% of your expenses.
Okay, so really it just makes sense to hire somebody like you to figure that out.
Exactly, yeah.
Okay, so like, do things like car washes apply? Because here's the thing, is I think about real estate agents, right? Because they're self-employed, really. And in my perspective, they not only have to look good, so talk about wardrobe, is they gotta look like they know what they're doing. They're not gonna show up in like a 2001 Dodge Caravan that's rusted out, right? So to me, it's like, I'm sorry, if you can't afford a car that doesn't have rust, like why? Like, how are you going to sell my house? So what about like car washes and like oil changes? If you're constantly in your car and you're using that as part of your business, how does that work?
Yeah, so oil changes, yeah, because that's regular repair or regular maintenance. Car wash, I would say, yeah, you could definitely say that that's a regular maintenance item that you have to do. Definitely would extend the life of it probably, but yeah, I would say car washes would be allowable. Yeah.
Especially if you live in Canada when they salt the roads, or even if you live close to the ocean, it doesn't matter. The salt in the air is still terrible.
Yeah.
Okay, so going back now to working from home, I literally just moved into my new headquarters, which is, I don't know, like a 200 square foot bedroom. I don't even know actually the square footage. But the entire space is used for business. Mm-hmm. So what can I expense in terms of the space?
So if you work from home, you can actually expense a lot of your home expenses, but based on the square footage that you use. So let's say, like you said, you have a 200 square foot home. To keep it simple, let's say it's a 200 or 2,000 square foot house. So you'd be able to claim like 10% of your expenses. So you can claim utilities. You can claim, if you have a mortgage, you can claim property tax, but you can only claim mortgage interest. You cannot claim the principal amount. You can claim home insurance, but all of it is based on the percentage of square footage.
Okay, that's cool.
Yeah.
Every little bit is helpful, right?
Yeah, and I'll just mention too, be reasonable with those numbers because it can be a red flag for CRA.
You don't want those red flags, right?
So if you get a little exuberant with what you're claiming for home expenses, they might come at you and audit you. So I mean, generally with any expense, right? So if you're like going overboard with these expenses, then it immediately raises red flags. You want to avoid the red flag, but you also want to like take advantage of everything you can expense. Yeah.
There's a fine line there. And I think most small business owners who have absolutely no clue about accounting and they're trying to do their own books probably make a lot of mistakes in the sense that they probably overclaim or they underclaim. And so that's why it makes sense to hire a professional. Okay. So what expenses, all right. So anything else with regards to home expenses? I feel like we got that covered. So funny, at the time of this recording, it's end of January. And I know that accountants and people in general and business owners are like, oh no, it's tax season because like it starts, right? People are like starting to prepare. But most people don't know is when are taxes actually due?
So funny. I get this question a lot. So if you're an individual and you're employed by an employer, your taxes are due April 30th. If you're self-employed or have rental income, your taxes are only due by June 15th. So you do have an extra month and a half there. If you're incorporated and you have to get corporate tax returns done, then it's due 6 months after your year-end date. So if your year-end date is December 31st, then your taxes are due by June 30th the following year.
Okay. So by due, meaning that anytime prior to that 6 month, you don't get penalties, but afterwards you do. Is that correct?
Yes. Afterwards, you would get penalties on the amount that's owing. If you owe. If you get a refund, they're not going to penalize you.
Well, I'd hope not.
Yeah.
Okay. Is there anything else we need to talk about when our taxes are due? I know and it's interesting because when you incorporate, you get to essentially choose your year end. It's not December 31st. It's some arbitrary number. Is that correct?
Yep. Yeah.
Okay.
It's kind of up to you. Yeah.
Which is really fascinating. I don't know the mechanics behind that, but I'm assuming that it's easy to do the end of the year, December 31st, but some people probably do it in accordance to when they incorporated. Right?
Yeah. Most people will say if they started their business and the founding date or the incorporation date was July 1st, then they'll just make their year end June 30th. It's the easiest way to do it. But some people also follow depending on their industry. Sometimes some industries it's regular practice to have their year end March 31st. Okay. And there's a difference too, right? There's a calendar year end, but there's also a fiscal year end. Okay. The fiscal year end is when you base off when your taxes are due, not the calendar year.
Right. That's if you're incorporated, right? So whatever date you chose as your fiscal year end, but this does not apply to people that are employees, right? Because they follow the calendar year end.
Yeah.
Okay. So how can I prepare in best case? And we hate talking about this word, but worst case scenario, you're getting audited. So how can you best prepare in the event the worst case happens? Knock on wood.
So the best way to be prepared is to be organized. So tracking everything, keeping records of everything. Just don't be lazy with those sort of things, right? It never pays off, especially if you get audited and you're like, you have $100 here that you claim, but you don't have a receipt. Why? And then it might cause them to dig further and further and further and maybe think that you're trying to hide things, right? So the other thing is just, yeah, again, like I said, don't hide anything. Be honest. People don't like paying taxes, but at the end of the day, I feel like it should be a privilege to pay taxes, because
Totally.
especially if you have a business, because it means your business is doing well, right?
And we were talking about this right
Yes.
before we were doing like pull-ups or muscle-ups at the gym, when we're like, because you mentioned something about people that were like, oh, maybe I should pay my taxes now. It's been 3 years. And I'm thinking, what are these people doing? Like, to me, that's a big red flag. And I don't know, people don't know. But it's kind of like, in a way, it's an insult to everybody else who's following the rules, right? Because they're doing their thing, they're paying their taxes. But, at the end of the day, it's like, you've earned the money, just pay the taxes. Like, Dan, my husband, he even says, like, what an honor it is to pay taxes. And I thought, wow, that's the silliest thing I've ever heard anybody say. And he goes, no, it's just because it means that you've earned money, right? Yeah. You've earned the money to pay the taxes. And if you're good with your cash flow, then this shouldn't be an issue.
Exactly. Yeah.
Cool. Okay.
You don't need an accountant, Renee. You already know it.
Oh my God, no, I hate numbers. I can't even count my reps at the gym. Okay. So essentially, do everything you can to avoid being audited. And the off chance you are, it is a grueling process. Knock on wood, I've never been, but let's just say I've known people that have been through it. And if it happens and you're organized, it's just like a little like blip on the radar. It's like, here's everything, have fun. So let's move on, because I don't even want to like put bad negative into the air talking about being audited. Okay. So what are my tax obligations and opportunities?
So tax obligations, well, the main one is that everyone needs to file their taxes. Even if you make zero income, you have to file your taxes, especially if you've made income in the past. So it's basically just a way for the government to keep track that, like, okay, you're not making any income, you're not hiding. So, and it keeps you in their good books, right? So that's a big one. Another tax obligation that may apply to some people is tax installments. This is a bit of more complicated area, but basically the simplest way to explain this is, if at any point, or if there's any year where you have owed $3,000 or more in taxes, that's even from self-employed or incorporated, the government may request that you pay in installments. So I think you mentioned before, it took 2 years before your old business had to pay in installments, and that is one of the rules. It's whether you may either the last 2 years you had to pay over $3,000, or it's you're expecting to pay over $3,000 in like the current year that you're in. They may request to make installments. So, but that's more of an issue that, like, if you get there, it's something that you would deal with at the time. So, which
is great, because then at the end of the year, there's no question. You've already paid all the taxes. Yeah. So it's like, it's a cash flow thing too. It's like, you may as well just pay it when you have the money. I loved it.
Yeah, if you owe $12,000 in taxes at the end of the year, wouldn't you rather pay $1,000 a month?
No, I remember the first couple of years, it was like thousands and thousands of dollars, and it was like, and we expected it, so we were smart about it. But it's still like, it was like, you're a small business owner. It's like, here's like $30,000 of just my cash, but you can still pay the equivalent over installments, and it hurts less. And then, it's also good for projections and everything as a small business owner. Okay. So let's talk about now opportunities.
Yeah. So some opportunities, there's your basic tax credits out there, basic amounts. There's also some other opportunities based on your situation. A lot of them really come up if you have kids. So I'm not saying that's an excuse to go have kids, but one of them is a child benefit.
They're still more expensive than your tax.
Yeah, exactly. But there's a lot out there to help you if you do have kids, because like you said, yes, it's very expensive. You could be eligible for monthly payments. It's called the Canada Child Benefit. This could give you up to $6,400 back in the year. So you'd get that out in a monthly payment if you're eligible. The one big one that I'm not sure people know about is daycare expenses can be claimed. There's a couple of rules though. It's the person who makes the least amount of income that can claim it. Only one spouse can claim it. So that means if you're self-employed, but you're the lowest earner, you can't claim it. You have to be employed, right? So there's some very strict rules there. It's up to $8,000 a year for every kid under 6, and it's up to $5,000 per year for any kid between the ages of 7 and 15. I do have a client personally. I'm not going to name who it is, but he did miss out because she was the lower earner, and missed out on some deductions there. But it's things sometimes you don't know about it. So
right. Yeah. And especially if you're doing your own accounting and bookkeeping, if you're not professionally trained in these things, and it's really tough to know. And yes, all that information is available for free online. Is it right? Who knows? But you definitely need to trust the experts. Okay. So tuition expenses, and we got to move along. We've got some incredible questions here. So tuition expenses. Did we talk about that? No, we didn't.
Do you have over $100 tuition? No, sorry, you're jumping in and out. Okay, I think we're good.
We're good.
Okay. Yeah, so tuition, I didn't talk about that. Tuition, yes, if you do have a child that is in school, and they're not making any income, or say not a lot of income, you can claim that as a parent, right? They can transfer that amount to you, so you could have some of that benefit. Or if you go to back to school yourself, or you're doing some extra online or night school, you can claim those tuition expenses. Yeah. So
would online school be like an online course that I bought on like email marketing from Jane Doe up the street? Is that considered tuition?
No, it would have to come from an actual like school, university, college. Yeah, and it would actually have to be very specific to, say, your certification, or like continuing education is the best way to say it. Okay. Yeah.
All right, so moving on. How will I know if my business is doing well?
Yeah. So the best thing you can do to even start is to learn about your industry and what metrics are important. So this might bore a lot of people, but it's important to know, if gross profit margin is a key metric in your business, right? If you have lots of cost of goods sold, that's a really good, important metric. But common ones are just profit margin, gross profit margin, debt to equity, and things like liquidity ratios. Just basically saying how insolvent you are. If you sold everything, could you pay off debts? Those are the big ones. Know them, track them, and it's going to tell you if you're below, at, or above the average in your industry, which is always a good indicator.
Right.
I would say the next thing is cash flow. I actually had a professor who, I think 3 times, like during her classes, 3 times during the hour, she would say, cash is king. Cash is king. You can have a positive profit margin, but if your cash flow is always negative, you're eventually going to run out of money, which means you can't buy anything, you can't pay for anything, and your business will go belly up.
Right. So, yeah, it's tough because we always look at, there's so many, when people talk about like the success of their business, we're like, oh yeah, we're like a $10 million a year business. And I always like, to ask them when they say that, well, what are your profit margins? And then what's your cash flow? Because it's kind of like, it's the foundational thing. And I know, somebody said this before, and I'm totally going to paraphrase this. But they say something like, a small business will eat up all of its available resources. And if you know that, like, if you're self-employed or you run a small business or even a medium-sized business, anytime there's extra cash available, we tend to invest it into other areas. And there's positive reasons for this, tax reasons as well, because you definitely want to spend some of the profits so you're not taxed on it. But the other end of the equation too is we find this like inherent need to always like buy the next thing, buy the next piece of equipment, when really, when you're looking at it from a 30,000 foot view, you don't need it and you can't afford it. But you got the cash in the bank, so they think they can afford it. So do you have any advice on this? Like how to look at things in terms of like a necessity versus like an investment?
Yeah, so I think the best thing you can do is budget and forecast the year. So you're never going to be exactly what you budgeted or forecast. It's just never going to happen. I've never seen it happen. I've done a lot of budgeting in my life through my jobs. So the best thing you can do though is to categorize all those expenses as fixed and variable. So fixed are just the costs that are going to come out the same date every month or every quarter. Things like rent, if you're renting office space. Know those, make sure you have money for them. The variable expenses are just the things that like fluctuate. You might need to buy more supplies one month compared to the next, but you should have a budget, right? Maybe there's some trends that will say these expenses are going to increase this month versus the last month. So just really paying attention, daily basis, check your bank account, make sure you got money in there, check the budget review, do it in depth. And this way here you can forecast into the future and you can start to ask yourself, based on when things are going to come out, is my cash flow going to dip in the negative?
I actually use a really good program called liveplan.com, which helps you create like incredible business plans, but it's great for sales forecasting as well.
Yeah.
It's super helpful. So I know like in October, I'm going to be dipping into my cash flow because I'm doing a live event and, publishing a bunch of journals kind of thing. But it's super important to be looking at that stuff all the time. All right. So let's move on because we got some awesome questions still ahead of us. Do I need to incorporate? And if so, when should I incorporate?
So you don't need to. It's not required. I would say that you have to measure the risk between incorporating and not incorporating. Actually, I wouldn't say risk. Like, what's the benefit to you in your business? It depends on what you want. And the best way to explain this is the first thing is it's unlimited liability versus limited liability. So if you're self-employed, you're basically assuming all the risk on what your business does. So if you get sued, the business is tied to you. As a business, when you're incorporated, you're basically creating another person, like a separate entity. Mm-hmm. So when your business or corporation gets sued, they get sued, not you.
Right.
So that's really important. Being self-employed is a bit more simple and a bit more affordable. There's less costs involved in incorporation or in not incorporating. When you do incorporate, it can be a little pricey and it can get a little...
But that's is that upfront fees though? Like when you're talking about first starting out, right? To incorporate costs a lot more than to just be a sole proprietor.
Yes.
But you're looking at long-term things. Like even if you're just going to be running just like respectfully a small Etsy shop, right? And it's going to be like your side hustle. But long-term, for whatever reason, something happens and your product is defective and it causes somebody to be injured, say, right? You're incorporated, the incorporation gets sued, not you, but as sole proprietor, you get sued. However, let's talk about the minutia of this too. As you are the owner of the incorporation, there's still some of it that kind of disseminates down into your responsibility. It's not like you're completely off the cuff, right?
No.
Right. But it mitigates the larger risk.
It does.
And I've lived through this too. And let me tell you, while the owner, me, still absorbs the emotions of the incidents, but being incorporated, let me tell you, long term, it is the best decision. Initially, more expensive. And here's the thing too. When first starting out, you can always change, right? Is that true? You can go from sole proprietor to incorporation?
Yeah, to be honest, I'm not really sure what would be involved with that. Off the top of my head, though, it's probably going to be more complex than anything. I don't think the cost is relatively high to like dissolve a corporation.
No.
I feel like it would be a little complicated just because you'd have to deal with shifting assets to yourself if that's what you're going to do, right? So
yeah. No, and I always say like default, if you have the money initially upfront, is incorporate. I always suggest that. And like, I'm no lawyer, so I can't actually provide this advice on a professional scale. Personally, it just mitigates the risk a lot more. But if you do need legal advice, please contact your lawyer. I am not a lawyer, and I am not here to tell you legal advice. Okay. So I know there's like, in speaking of, there's a lot like sole proprietorship versus corporation, like unlimited liability, limited, like go into detail, but I feel like that's probably a better question for somebody's a lawyer.
Yes.
So let's move on. So is it better to pay with a salary or dividend?
I usually hate this type of answer, but it depends.
So first of all, let's talk about what exactly is a dividend, because some people don't even know this.
Yeah, that's a great question. A dividend is basically a payment at the end of the year that the corporation will issue to its shareholder, and it's just basically like the shareholder is taking a piece of the profits as a return on. It's the easiest way to think about it. So you can pay yourself. It is a way that you can pay yourself out instead of a salary, but it really depends on your individual situation. If you want a salary, I would say it's best if you want to invest in things like RSPs. It does give you accessibility to some other tax credits. Dividends is better if you want to keep more money in the business and reinvest it in the business, and it also reduces your taxable income on the business's taxable income slightly. So
right, but you can only pay yourself dividends if you're incorporated. So.
Yes, you can't do it if you're self-employed. Yeah.
Okay. Right.
Yeah.
So self-employed, this is an issue. If you're incorporated, you have the option. I know when I was running my agency, the first year we were just paying ourselves through dividends, just when we were getting things going, and that was what came recommended. And in the end, it actually served us. But then as soon as we were getting employees and we had like payroll and stuff, it just made sense for us to pay ourselves. Because the thing about dividends too is you have to pay personal income tax on it. It's not automatically deducted. And It's just another layer of complexity.
Yep.
So it's not like you get a $10,000 check and it's like, whoop, right into the bank. You don't have to worry about it. No, you got to pay taxes on that.
Yeah, and you have to be careful with how you record the dividend too, because I won't go into too much detail, but if you did get audited, dividends are only a year-end thing. So you technically can't issue dividends on the books on a monthly basis, because the government could come back and say, well, technically that's payroll, so you owe us in employment taxes. And you could have a big tax bill. So, yeah, you should look into that if you want to pay yourself dividends.
All right. Okay, so do I need a business number?
Depends on the business structure that you want. If you're going to incorporate, yes, you do, because you have to register a business number with the federal government. If you're self-employed, you don't need a business number to start a business. All you need to do is register your business name with, usually it's your provincial body. So New Brunswick, if you're living in New Brunswick, you register with the province of New Brunswick, your business name. However, there is a rule that if you make over $30,000 in sales at any given point in the year, you do have to start filing HST. And if you do, you're going to need a business number to have an HST account number. So it
Right.
depends.
So if you're filing HST, which means you can charge it, right?
Yeah.
Okay.
Yeah.
It's not like you're just not charging taxes and all of a sudden you have to pay taxes at the end. It's like you're making over 30, you can charge tax. I mean, here's a good question actually. When can you actually start charging taxes? When you have a tax number, right? But do you have to have $30,000 of revenue?
So no, you don't. But you should think about it, because you can start charging taxes if you want. This thing is if you do, you need to start filing HST remittances, which means you do need a business number and an HST number. But it's important to think about the decision first. Do you want to charge tax right away, or do you want to wait? If you do, the second you open a business, an HST account number, you cannot close it unless your business goes kaput and you make $0. The second you start filing HST, you got to keep filing it. So
let's just hope that everyone listening to this starts filing HST after they make $30,000 and they don't have to go backwards. They get the best advice, they will be making a lot of money.
Exactly. Yeah.
Okay. So I know there's differences between the two. Is there anything we need to touch on here with regards to incorporations versus sole proprietorships? We talked about it.
No, I think that's pretty much it. Yeah.
All right. So last question. What are some common mistakes I should avoid when working with an accountant?
Mm-hmm. So this one here, this is just, I like this one because you should never think that you know more about accounting than your accountant. I don't care how smart you think you are. It's just such a complex that unless you're a trained accountant or a past trained accountant, then maybe you can have some validity in what you say. But it's like saying you know more than a lawyer when you're getting sued. No, I'm going to represent myself, but I wouldn't do it because I know zero about law, about the law system, whatever. I don't know.
You probably know more than the average person.
Well, yes, but So that's the first thing. Just never think you do know more than them, and just trust them in what they're doing. And if they mess up, well, you'll probably find out pretty quick.
So what happens if I feel like my accountant's shady? What are the steps that I take?
Yeah, so maybe you could screen them before you hire them. So ask them little questions like, you could just maybe pretend that you wanted to hide an expense, or like, hey, I bought something personal. I want to hide it in my business, or I want to claim it through my business. Generally speaking, I stick to the book. I don't like to do that, just because you never know, it could come back at you. But I would just say, if the response is, yeah, we'll figure it out, I don't know if I would work with them. Okay. So yeah, maybe screen them a bit at first. Maybe try to ask them some questions like that. Yep. They might slip up. So
okay. Yeah. And essentially it's like, we think about this as a long-term game. Like accounting is a marathon. It's not a sprint. Mm-hmm. You do it right. So something you're trying to sweep under the rug today could come back and bite you in the butt less than 7 years down the road. Exactly. Right. And by then it's long gone. We're not thinking of it, but oops, now it comes up. So be mindful of that. And then the last thing you want to say about hiding stuff from your accountant.
Yeah, so just don't do it, right? And this goes for at the start of your relationship with your accountant, during and after. It's when your accountant's starting to work with you and they're asking you questions. Do you have this? Do you have that? Be honest with them about your expenses. Be honest with them about your current cash position, right? Things like that. Just don't hide anything. Make sure you're recording all the expenses that are relevant to your business. And yeah, just share it. Just be open with them, because it's the best thing you can do. Because if the CRA does come back, it's not the accountant that's going to bite the bullet, it's you. And if the CRA charges a penalty against you for whatever reason, you're the one that's going to pay for it. not the accountant. And if your accountant's smart, they'll have a letter of engagement or some sort of contract that's going to basically like absolve them of anything in the future or after your relationship is over.
Yeah. So like I said at the beginning of the video, is if there's two things you have to invest in, like even before you go through branding and creating a logo and a beautiful website, there's a process, but after you've validated your idea and you're making money in your business, hire the legal team, hire the accountants, and make sure that from the very beginning, you set out on the right course. Because the last thing you want to do is like get an email or a phone call saying, oh, you've been audited. I don't even know how the process works, knock on wood. But then you'd be like, oh, sure, no problem. Here's everything. And it's beautiful and it's wrapped in a little bow.
Yes.
They would love that probably too. But the thing is like pay taxes. Paying taxes in a way, it's an honor, because it's like, it means you've made the money and now you've got to pay your dues. And yes, paying the taxes sucks, and we're one of the highest taxed nations, but at the end of the day, where we live in Canada, it's a beautiful country, and I think that it serves us well. We have the freedom to start a business, whatever we want to start, wherever we want to start, pay your taxes, hire people like Chris. Speaking of you, where can people reach you if they want to potentially, hire you?
The best way to reach me is by email. So chris@fitbooksaccounting.ca. That's the best way to reach me. I'm always on email. You can go to my website, fitbooksaccounting.ca. You can schedule a strategy call with me there. On my homepage, there's a button, first thing you see, and we can go over a strategy call and figure out what your needs are in that. But yeah, email or through my website is the best way. Or cool. Facebook too, my Facebook business page, yeah.
So any parting words for new entrepreneurs?
Sorry, you cut out.
Yeah, I was like, you froze. My question was very simple. Any parting words for new entrepreneurs?
Kind of just, I want to reiterate what you said. Like, the first two things you should do is go see an accountant, go see a lawyer, make sure you're doing things right. But I would also just say, don't hold off your accounting and your bookkeeping tasks. It's a daunting task to catch up. Mm-hmm. I've personally done it for clients. It is a lot of work. And it's just like anything else. Just do it consistently right from the start and you'll have no issues.
So it's kind of like, don't gain 40 or 50 pounds before the summertime, because then come May, it's like, I got to shed all this weight. Now it's so much work. But if you maintain it, then it's not an issue.
Don't go for the second serving at Christmas.
Yeah, don't bloat up with accounting bullshit. Don't go for the second serving of taxes. Cool. Well, Chris, I enjoyed having you. Thank you so much for being here. This was supposed to be a Facebook Live, but you know what? At the end of the day, this is probably going to work out way better. Thanks for joining me. And guys, if you ever want to reach out, it's chris@fitbooksaccounting.ca. I'm Renee from We Wild Women, and so I help first-time female entrepreneurs start their dream business the right way by introducing them to people like Chris and talking about the mundane, ugly things of starting a business to set them up for ultimate profits. So catch you later.